Hello, my name is Ayla Andrews and welcome to my weekly analysis for the week commencing the 3rd of September 2017. Today I'm going to be talking about Aussie dollar, euro dollar and pound dollar. So we're going to start with Aussie dollar on the monthly chart. We've got fresh data, which means that we have got a price action bar for August, which is this little red one here. What I want to say about this is that we have had a little bit of bullish momentum that's broken out of a range which was officially at about the level of 0.77. I've mentioned this level many times, and the high of which, the maximum that it ever was able to push through but failed to break any higher, was approximately 0.735. The reason why this is significant is because it's now going to potentially be the area where, if price is going to be going into a bit of a pullback, and this is obviously just a theory at this point until I start explaining the lower time frames, this potentially is an area where price may feel it wants to retest. Yes, we had the main level, which is 0.77, but this little minor level here could also lend itself as a bit of support, particularly if it starts to combine with either one of these EMAs that start coming up below it, probably the 10, because that's going to be faster moving. So the reason why this is now significant is because we've got price action bar for August, which has actually tested this level at 0.735. So there's a couple of ways in which I can read this. Even though this has fairly bearish implications, at the very least it means that this upward move has paused, but the bearish implication could actually be simply a one bar pullback, which enables price to pick up some more buying power around this level, which hence we've had a bit of a tail, so it's already started doing that, in order to attack this 0800 level again. We've also got the 10 and the 20 EMAs coming up underneath, which effectively will be lending support in the very near future as well, which, as we know, generally price action likes to pull back into its EMAs and then make another move. So theoretically we have got price action which could be lining itself up for another attack of this level at 0800. And also, very importantly, the 50 EMA on the monthly chart, it's definitely trying to crack that, which is at approximately 0.8030. So remember those levels that we've got. The 0800 level, which of course is a significant round number, means that we've broken a sort of a 10 decimal point level as well, because we're coming out of 79 into the 0.8 level. But also we need to get past this 50 EMA on the monthly, which is a very important major EMA to break. Of course, there's going to be some further obstacles on the way, but in between this and the 200 EMA, which is this yellow one here, we have actually got a little bit of room for some upward movement. Now that's projecting ahead. That may take a couple of weeks to pan out, so we're just going to concentrate on what's happening right now. And the next thing we need to do is have a look at the weekly to get some of the inner detail of what's happening. So the last time I spoke about Aussie, I mentioned that we'd come into the 200 EMA, which was also combined with the 50 EMA on the monthly, but the 200 EMA on the weekly. So there's a cluster of things going on here. We've got the round number at 0800, we've got the 50 EMA at approximately 0830, and we've also got this 200 EMA just below the 8 round number level as well, 0.8 level. So there's a whole zone of stuff here which is potentially going to provide some serious resistance for price to get through. However, price has certainly been pretty strong since it's managed to break out of this range, which it has been in for a considerable amount of time, a good couple of years. So it's broken out of here. We've had our first pullback into the 10 EMA, absolute perfect touch on that, and then it pushed away very nicely. Now the reason why this is my bias of a slightly more bullish bias, if you like, is because we are currently following the rules of an uptrend. We've got higher lows and higher highs. This is a high, it's higher than this one. These lows are making higher lows. So we are effectively following the logic of an uptrend, plus we've now got a little bit of a bar here, which is definitely making a bid for trying to break through this zone. There's also something else I can show you on the daily, which when we get to it you'll see what I mean. So this to me certainly looks like it's taking another attempt to break this. Now this is interesting from the point of view of, should it break this, then we definitely do have quite a lot of buying and a fair amount of agreement with the fact that this is a buying market if it should break through this zone. and theoretically I would like to see it clear the 08030 level, but certainly getting above the 0800 level is, and closing above it, will be of some interest to us, because by that point it would have absolutely closed above the 200 on the weekly as well, which is pretty significant. So we can see also that this 10 EMA is nicely angled. It's actually starting to carry price up very nicely. The angle is is certainly steep enough to show a degree of momentum here. When EMAs start to shallow and then start to flatten out, then it can mean that there's general weakness. Usually you can see that in the price action as well, but it's certainly another way of confirming whether whether momentum is over. And for the time being, the 10 EMA is certainly not giving me that impression on the weekly. It certainly looks like a market that's definitely trying to break through this zone. So quick look at the daily and you'll see what I mean by this pink level. This pink level was a not particularly clearly defined level of resistance, but I effectively wanted to get an average point for this high here, because I wanted to see whether we could theoretically start cycling up, which in a sort of very slightly I'd say messy fashion it's been doing so. So if this is your low, this is a higher low, this is another higher low, and we've got a high here followed by a higher high here. So there's effectively a little bit of cyclicity here, which is being carried quite nicely by the 20 EMA and the 10 EMA, and they are these price action bars are looking like they want to try and break through it. Now on the daily, I'd say this doesn't look quite as impressive as it does on the weekly chart, but there's potential here for it to start to draw some interest, because certainly it is looking like it wants to push away here, and so that in itself might draw interest, which means that increases buying as people step into the market to assist it, if you like, in going higher. Don't forget, we've got to take out this level here really, which is the 08030 level, which is effectively this high, but this is where the major 50 EMA is on the monthly, so that's pretty important. As I say, looks like bias to the buying side. As I say frequently, we can only read the technical analysis as we see it. We try to see the more subtle significance of certain indications, but in the end, this is not crystal ball predictions. If it decides to do something else, then there may be other reasons afoot. But from a technical point of view, this certainly looks like it wants to try and break this 0800 level. How it does this, it may need to actually consolidate below it. It may need to come back and retest the 50, pick up extra buying and have another go. But from where I'm reading it right now, this looks like it wants to at least try. Something to bear in mind about this is that if this does end up being a quite obvious failure in terms of the amount of attempts it takes to test this, which is also indicative of the amount of time it takes, if that goes on and on and on, then we will very likely see an opposite reaction, which would be a deeper sell-off. We've had our first attempt to break, which failed. We're now definitely in the zone of a second attempt. You could argue that was this one here, but it definitely looks like it wants another go. So we're on our sort of, not, I wouldn't say our last chance, but we need to break through on this one. And if it takes too long, then we could see a bit more of a bearish sell-off for this particular failure if we don't break through the 0800 level. So now let's move on to euro, and euro is in a bit of a different situation to Aussie. Aussie's trying to crack through the 50. The Euro's actually done it, and in some ways, and I've said this before as well, there's a little bit of similarity between what both currencies have been going through. They've both been fairly range bound for a long period of time, and eventually when a market works its way out of a range, it tends to have a fair amount of momentum behind it. So as you can see, there's been considerable amount of buying for some period of time. So to get a bit of easing off of the pressure, if you like, this certainly would be a fairly logical result, and in many respects a pullback at this stage is, in my opinion, more about taking off the pressure than trying to return to what was a selling market through here. And if that is just a little bit of a pullback, then effectively we might see further attempts towards the bias of a more bullish market. So, in terms of price action, this is fairly nondescript from the point of view. It just, in my opinion, implies pause, but it certainly doesn't mean big sell-off all the way back down into these sorts of levels. I don't see that at this point. We've literally changed from being we've been in a selling market. We have now changed into more of a buying type of setup, where we've actually got, as I've said before, the 20 EMA and the 10 EMA are coming underneath the price. They will be certainly serving as more of a supportive type of indicator than a more selling type of indicator. But the significance of being above the 50 is important from the point of view that this, now that we're above it, this may be an area where price is unable to actually break back below it. So let's have a look at the weekly, because we need to get a bit more detail from that. And I'll just reposition this chart so it's in the right place. So we finished this last week with a fairly strong selling bar after we had attacked this round number of 1.2. Again, a significant number. If we've been coming out of the teens, as I've said before, and we're going into a round number of 1.2, there is some significance here. So this was clearly a fairly well defended price level. It did poke through, but ultimately it closed below. It didn't quite manage to close below the more technical level of 1.19, and the technical level was based on a historical level. Let me show you. Historical level that was back here. It's to do with this this fairly deep spike that we had down here. So that was where I estimated we might be finding a bit of a pause. So it tended in this case to pretty much ignore that and just go along with its logic of cycling higher, which is higher lows and higher highs, and it's been doing that very nicely. And when markets get into this kind of formation, they can carry on doing that for quite some period of time. There's nothing to say that that wouldn't continue. However, we may be, as I was saying, if you look back at the monthly, because we've had this extreme amount of buying, they're all green bars and they're all pretty solid, we may need to take a bit of a pause. So let's get back to the weekly, and I'll just describe, let me just get back in position, what we might be seeing. So theoretically, this has all the implications of a bearish bar. So theoretically, what we might be finding is that we need to come back here to the level of the 1700 level, 1690 level. 1.17, 1.1690, which is approximately where this 10 EMA is. We might need to come back, connect with that, and then that could produce a second attempt to crack this level at 1.2. If I find the price has failed at 1.19, I mean, I'm really projecting ahead here, because this is, there's a fair distance between this point and the 10 EMA. But if we do find that we pull into the 10 EMA, pick up some buying, take another attempt, but we fail to break through 1.19, I would see that as a lower high. And then we could be seeing something which is a bit more of a deeper sell-off, whereby we may need to connect with the top of the 200, or even catch up with the 20 EMA that might be coming up through. So do bear in mind that this wouldn't be the position of it. It would be slightly higher up by the time we've wound out some of this process. So we'd be going down, possibly up again, and then back down again. So this would be a bit nearer, and potentially the 10 EMA would be starting to shallow and flatten out and generally look a bit weaker. At the moment, everything's looking very directional and very strong. Which makes a great deal of sense. I did mention last week when I spoke about Euro that there was a little bit of concern about the momentum. We're on a higher time frame, and it's in an overbought area. And I do think that RSI can have more significance on the higher time frames in terms of the overbought and oversold areas. I think the lower down you go, I think that's much more about trending than it is about an indication of whether something is weakening or not in terms of momentum. But we're on the weekly, and this is not making high highs. This is, hang on, let me just make this a little bit bigger. This market is, sorry, one sec. This market here, if you can just see, there's a high there, and this high is slightly lower, whereas on this, on the price action, we've got this high followed by this high. So the underlying momentum of this particular currency pair isn't looking quite so strong, and interestingly enough, we did get a sell-off. So just look out for a little bit of further selling on here. We might need to see a winding out process, which is possibly easier to see on the daily. So let's go and look at that. And by winding out, I mean that sometimes the market has to go through a pretty choppy process of up and down, and when you look back at it, you see that it was actually trying to continue a particular trend, but it kept getting pushed back down, and then you get your change of trend rules. So if the uptrend is based on higher lows and higher highs, you then start to see lower highs and lower lows, so that the rules have changed, if you like. So look out for that as well. Certainly from the daily point of view on Friday, this certainly implies that we need perhaps a little bit more selling to take place. We have got, this is the high, we had a push down to here, and then we had a push back up to here, and now we've come back down again. So we've already given ourselves a lower high in this little bit of a formation here. I can't say for sure how far this is going to go at this stage. There's still potentially a little bit of support that may come through at this level here, which is the, let's just say, around the 1800 level. There could well be a bit of support, which might induce a bit of a bounce. Now again, if we create another lower high, then this is showing signs of cyclicity to the downside, and obviously once that starts to become more and more apparent, that then draws more selling into the market, which then it's a self-fulfilling prophecy, if you like. It could well continue in that vein until it hits something significant, which might be something like the 50 EMA, where there may be buying orders ready and waiting to pick up where this market then tests it, and then that potentially that might produce the push higher. I don't think that this is over in terms of an uptrend. What I'm saying is that we might find there's a bit of a period of slightly messy consolidation, or a bit of a pause that requires a bit of a sell-off to take some pressure out of this buying market. And once that's over, then it might be in a better position to attack the levels again of 1.19 and the 1.2 level up here. Okay, so now let's go to GBP. GBP is still very much following the rules of a downtrend. We have tested the 20 EMA in the past, so the fact that we are above the 10 and testing the 20 is not nearly as significant as it would have been had we only ever respected the 10, and now for the first time we were testing the 20. Because we've done this before, this doesn't hold quite so much significance. What is slightly different though is that when we look at the pullbacks for the previous couple of occasions, this one's a bit of a mess, but it doesn't go on for very long, whereas this has been trying with a serious amount of effort to definitely bring in more buying, and it's definitely been doing that. This does look like a very different type of pullback compared to where we've been before. These kinds of pullbacks are much more about pulling back in order to get a better price to continue, whereas this looks more like a market that's trying to change its direction. That is what it looks like. Whether it manages to do that is another thing. So the fact that we pulled into a monthly 20 EMA and then we've had a bit of a sell-off, that's all extremely logical stuff. Nothing there is unique. What could be interesting though is when we look at the lower time frames, you'll see that there is still some desire, even if it's quite weak, to still follow the vein of what has been going on here, which is higher lows and higher highs, basically still trying to follow the cycles of an uptrend. We're dealing with a couple of problems here. We've got the 20 EMA, which is mixing in very nicely with the round number of the 1.33 level, so that's also something that would be an EMA on a round number like that is a bit of it has a little bit more strength to it. So let's go to the weekly and see the finer detail of this. So this is what I was trying to describe about the cycles still being in the formation of an uptrend. It's not the most powerful looking uptrend I've ever seen. These are quite deep cycles and they never really get going. If this was truly a proper strength uptrend with strength, the buying side of this cycle would be much greater. There'd be more in terms of green bars. It wouldn't be quite so mixed, and the bars would be less overlapped. They'd be much more joined from end to end, and probably would have moved further. But it still seems like it wants to try and keep going in a rather weak sort of way. So we're dealing with the current issue of the significant number again of 1.3. This is our weekly bar here, which has the previous week reversed this, what looked like might end up being a deeper selling period, has actually reversed it just on the 20, but not, it's not quite supporting it, but it's just closed onto it. So this bar here seems to want to try and continue this process of what is higher lows and higher highs. Whether it's got the strength to do it is another thing. So really I would need to see a break above 1.3. That's really important, because it needs to, it can't match this high. If we fail here and we match that high, we've effectively got what you would describe as a head and shoulders, this being the shoulder, this being the head, and this being the second shoulder. If we have that kind of pattern, then that's a well-known pattern. People will recognize that. It will be recognized amongst all the participants in the market, and that, of course, in itself would then produce the potential for bringing in more selling pressure. So at the moment, I absolutely have to see 1.3 taken out, whereby possibly we may see a retest of where price failed to break before, which is the level of 1.32. So theoretically, we've got a number of round numbers that we really need to deal with. 1.3 is significant, because if we break that, then theoretically we can match this potential high here at 1.32, and then of course there's a 3.3 which mixes in with the monthly 20. So there's a fair amount to get through. Quite a lot of the markets are in the same position, trying to fight some serious obstacles. But don't forget, cycles are powerful, and it is trying to cycle. I don't see that this has as much strength as some of the other currency pairs. Certainly Aussie looks stronger in that sense. But this market is having a bit of a go, and sometimes you can have a little bit of a weak start that then starts to pick up momentum. So just watch out for this, but you really need to be above the 1.3 if you're going to think about taking this longer. And if you see signs of continued attempts to break 1.3 and it fails, be prepared that this market then may consider having a deeper sell-off. And let's have a quick look at the daily, and this as well just shows, in my opinion, a kind of fairly unclean method of trying to get higher, but certainly it looks like it's climbing. This is our lowest part. We've had a push up, a pullback onto the top of the 200 on the daily. That's not insignificant. The daily chart is a well-respected chart across all types of trading, and it looks like it wants to push through. Because this was probably at the end of the week, I would imagine that a lot of people wanted to close out their positions. End of week, end of month, a lot of things like that. End of month obviously would have been the Thursday, but there's still an element of just wanting to clean up for the month previous. It's probably that they're quite theoretically, it might not have been quite so much trading volume on the Friday, not least of all because we had non-farm payroll as well. So the fact that this bar is a little bit insignificant might have a lot to do with other factors, like people sorting out their accounts and tidying up for the fresh month ahead, if you like, and it just happened to coincide more or less with the end of the week and obviously the end of the month. So this is looking like the EMAs are trying to get below and possibly get into position to carrying price. So we could see a break of 1.3, and certainly some sort of attempt to match this high if we get above the 1.3. That's really the deal breaker. But any signs of consolidation below here, then this really is looking at something that might be much more about a deeper sell-off, but it needs to confirm it, and at the moment it's got two options. It can go higher or it could go lower, but it's going to show you with its price action, so keep your eye on that. Anyway, thank you very much for listening, and I look forward to speaking to you next week. Bye.